See that obviously you see the move with all of us as Tesla's earnings are now out. We are going through the numbers. Our expert Phil LeBeau is doing that just now. Presumably from the move you're seeing, at least initially, Wall Street seems to like the move. It all comes down to the guidance for real for the rest of the year. We already kind of know what the quarterly numbers were for deliveries. Those were at 255,000. It's really the full year guide, Phil LeBeau, that matters most to Wall Street, given these closures we've seen in the Chinese factories and some of the other issues that Tesla has had, right?
You're right, Scott. And when you look at the numbers, and here they are for the second quarter, it is a beat on the bottom line, but a miss in terms of revenue. The bottom line coming in with earnings of $2.27 a share. The street was expecting earnings of $1.81 a share. Revenue coming in just shy of expectations at $16.93 billion. The street expecting a little over $17 billion. Operating cash flow of $621 million. And the Gigafactory in Berlin now at capacity, or at production, I should say, of 1,000 vehicles per week. But here's the metric that a lot of people are going to be focused on. The automotive gross margins coming in at 27.9%, just a smidge below analyst expectations of 28.2%. Scott, we talked earlier today about why this is so important. Last quarter, those automotive gross margins were 30% better than expected. And the company said, look, they're going to be compressed as you fire up production in Texas and in Germany. And that's what we're seeing here. The automotive gross margins coming in at 27.9%. We're going to dig back into the release, see if we have a little bit more for you in terms of guidance. And don't forget, obviously, the conference call coming up at 5:30. Scott, back to you.
Yeah. So we're waiting on that full year delivery number, which Wall Street is really hanging on. But this gross margin number, as you said, Phil, I had it at 33 in the first quarter. And here you go now down, let's call it 28. 27.9. So Phil's listening. He's going through this. There is the obvious question of what ability Tesla has to raise prices in the current environment. You've been thinking, Adam Parker, a lot about where the consumer stands. Phil, I was mentioning to you 33% was the gross margin number last quarter. So let's call it 28 this time. Everything plays into Tesla's ability to raise prices in the current environment, where the economy stands, what their raw material costs are, et cetera, et cetera.
And Scott, my producer, Megan Reeder, going through the release right now, says the actual number X zero-emission vehicle credits, which is important here, is 26.2%. So even further compression than what we initially thought here. So you're right, Scott. This is about a company that, as it has these margins, those margins are really, that's the difference maker between Tesla and the rest of the auto industry. And when they were 30 or 31%, that's what a lot of people, especially the bulls, were hanging their hat on. They were saying, look, you're never going to see margins like this out of GM and Ford or Volkswagen. They're down closer to 12 to 15%. But now they have been compressed. They're coming in at 26.2% for the second quarter. And again, we knew they would be compressed, and that's where they're at. Scott?
Phil, it's interesting. I mean, it's sort of the conundrum that, if you will, if you want to use that word, that Musk puts you in. Sometimes as an investor, you want to be optimistic about where this company is heading if you're a bull. But then you go back to a statement which he made just a few months ago where he was, quote, super bad. He had a super bad feeling about the economy. You don't even know whether he's going to be on the call this evening to expand on how he sees the environment today relative to what he was thinking not that long ago.
Yep. Right. And remember what else he said about the two gigafactories that they've just started, both in Texas and in Germany. He called them furnaces burning money. And that was one of the first times that you saw Tesla investors say, whoa, hold on a second. What can we expect for the rest of 2022? Now, the expectation, I should point out, is that they are going to be increasing their production in the second half of this year. In fact, the delivery estimate on Wall Street remains at over 1.4 million vehicles. That's quite an increase from where they are in the first half, where they only, I think they delivered 559,000. So they're going to have to deliver close to 900,000 vehicles if they are going to make that estimate for the second half of this year. Scott?